Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about an IT company called Birlasoft. This is a very old company listed in India, one of the largest in the IT sector, or specifically you can say one of the good mid-cap companies in India. So as you know, the IT sector is undergoing a slowdown. There is a lot of uncertainty globally. So it becomes important for us to understand exactly what's going on and how investors should behave with respect to their holdings in the IT sector. So we'll discuss all this in context of Birlasoft as an example in this video. Before we move forward, if you're new to the channel, please to subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer as per SEBI guidelines. You can pause the video and read it. This will be the flow of our discussion. We'll talk about the business model of the company. We'll look at the stock performance in the last 5-10 years. We'll understand how the company has performed in terms of numbers in the last 5 years. We'll understand why the stock has fallen from the highs. We look at the management's guidance for the upcoming years and quarters. We'll understand the present valuations. We look at the risks of investing in this company and then form an overall view. So it's a very simple business model. Birlasoft belongs to the CK Birla Group, which is a very trustworthy group in India. It's an IT services and consulting company which offers its services globally, especially in the US, where it has the largest revenue exposure. It works on the traditional tech platforms as well as the new technologies like AI, cloud, digital transformation, etc. This, in terms of size of the organization, around 12,000 people work with this organization. If you look at the revenue by geography, roughly about 87% of their revenue comes from US. So this brings a high exposure, high risk in terms of concentration in terms of geography. And if anything happens in the US, it directly impacts the revenue of the company. And that is what the situation is right now, where the US economy is not doing so well. There is a lot of uncertainty there. And whenever there is uncertainty in the economy, the companies try to cut down on their discretionary spending. And this directly impacts the IT sector first. If you look at the revenue by verticals, manufacturing contributes about 40% of the revenue. BFSI, exposure to BFSI constitutes about 24%. Energy and utilities 17%, and life sciences and services about 19%. So in terms of exposure to different industries, it is quite well diversified. These are the broad service offerings of the company. They divide it into three parts: digital and data, which is about 57%, ERP 33%, and infra 10%. So digital and data constitute digital transformation services by the company, as well as the data migration to cloud, etc. ERP is with regard to the ERP implementation in different companies, and infra is mainly related to the cloud infrastructure. If you look at the stock performance in the last 5-10 years, so post-COVID, there was a rally of digital transformation. All the companies wanted to go digital. There was no option, as people got aware that things like work from home, working virtually was the new normal, and everybody wanted to get digitally transformed. So that rally took the stock to almost above the 500 zone. Then there was a cool off because the company did not perform so well in the coming quarters, which brought it to about 250 rupees zone. And then we saw some management change, the things improved in the company, and then the second rally began up to almost 860 rupees. But now, due to the uncertainty in the US and globally, we see a slowdown in the revenue, compression in the margins, and that's why we see the stock correcting and now consolidating at somewhere around the 400 zone. In the last 5 years, we see a steady rise in revenue. But in terms of growth, if you measure and see, the last 5 years have not been so impressive. The average CAGR growth in terms of revenue in the last 5 years has been just 10%. Whereas other companies in the same sector, which are more aggressive in the business like Persistent Systems, Coforge, have grown much faster than this company. EBITDA also has not been so consistent. In FY21, they did a EBITDA of about 529 crores, which increased to 640 crores in FY22. And then this fell to 522 crores again in FY23. And between FY24 and 25, we see again a drop from 836 crores to 697 crores. So the profitability growth has not been in line with the revenue growth for this company. The same is reflected in the margins also. They did a margin of 16% EBITDA in FY22, which fell down to 11% in FY23. And a similar drop is seen in FY25 compared to 24, where we see a drop from 16 to 13%. And going forward in the next year, which is FY26 also, the management says that the EBITDA margin will be somewhere around 13% because they are ready to compromise a bit on the margins, but they want to gain some market share and maintain the growth. In terms of revenue profile, if you compare Birlasoft with other stronger companies in the group or in the same industry, the other companies are getting better margins also, which shows that the business model of Birlasoft is not as strong as the other IT companies. The ROE is now dropped to about 15%, which is not very impressive in this sector. And the promoter holding from the very beginning is slightly low in this company at somewhere around 40%. But the cash flow conversion in this industry has been strong, and it is the same for Birlasoft also, which is 84% EBITDA to cash flow conversion if I calculate in the last 5 years. So it's a cash-rich company. Another thing to notice in 2025, which is June and Feb 2025, we see some selling by the higher level management of the company or their relatives, which is not a very positive sign to notice from an investor's perspective. Now, what led to the fall in the last few months in the stock price? The growth has slowed down. The revenue growth is not as per the investors' expectations, or the guidances were not met. There is margin compression, as we saw the EBITDA fell from 16 to 13%. And going forward also, the demand environment is not so positive. There is uncertainty and the company is not sure whether they'll be able to deliver growth in FY26 also. So looking at all these uncertainties and the weakness in the numbers, the stock price is falling. So before we move forward, if you are still not a part of a Telegram channel, you can click the link in the description and join the correct Telegram channel. It's a free channel. Every day morning before the market opens, I share my views on how the market will behave this day or in the coming week. I also share important news and also portfolio allocation strategies, which will definitely help you as investors. More than 7,000 people are daily in touch with me through our free Telegram channel. So I look forward to chat with you tomorrow onwards to a Telegram channel as well. Now let's talk about the growth which the management is telling. They have signed deals with a total contract value of about 236 million in Q4 compared to the previous quarter, which is up about 4%. So the deal signing has been decent this quarter. But the active client count has dropped. It is at 254 now compared to 265 earlier. The company talks about them being early adopters in Gen AI. They are doing some major leadership changes so that the performance of the company improves. They are focusing on the GCC opportunity in India, which is Global Capability Centers. So in this, what happens is a multinational company, which is a foreign company, wants to open a offshore office in India and wants to outsource some work in India. So companies like Birlasoft will help them set up that kind of an office in India. So this is a big opportunity for companies like Birlasoft. They want to reduce their dependency on the US and focus on the rest of the world market. The management says that they've seen some reduction in the size of the deals from the existing customers, some delays in the deal signing, some closures in the existing deals also, but they have not lost any customer. And they are hopeful that the Q1 FY26 will be again flattish or maybe slightly slow. But Q2 FY26 onwards, the growth may come back. Margin wise, they expect it to be flat in FY26 also because they want to focus on the growth. Now let's talk about the valuations, which is the most critical part for our investment decision. The stock trades at a PE of about 22x and price to book about 3.3, market cap to sale of 2 times. So valuation wise, it is not very expensive, especially when you compare it with the other IT companies. It is not very expensive. But you should also understand that in terms of performance, this has been a mediocre performing company all throughout the decade. So they will not get rich valuations as compared to their peers. Secondly, even now there is uncertainty in the growth. The performance is not consistent in the last 2-3 years also. So although visibly the valuation looks cheap, but it is not something which you should jump and buy at. Now, what are the risks of investing in this company? The uncertainty in the demand environment, the reduction of discretionary spending in the US, the impact of tariffs on US as well as the rest of the world. All these things in a combined manner will impact the business of the company in the near term. Now, how the company adopts to AI, how their clients adopt to AI, what will be the impact on the business of the company with respect to AI? Will the simple works be done by AI and the size of the deals of companies like Birlasoft will go down? Will companies like Birlasoft have to reduce their team sizes so that simple works can be done by AI itself? So these kind of things with respect to AI we'll get to know going forward only. There has been furloughs in the company. That means due to the less work, the company has reduced the team sizes. And there is stiff competition from very aggressive players like Persistent. So now that you've understood the business model of the company, the financials, the risks, the valuations, the growth plans, what is our view on the company? If you are already an existing shareholder, the stock has already fallen from the highs, the valuations have become reasonable. So as the management says that in the next couple of quarters, they'll start seeing growth again. If that is happening, then you can continue to hold the stock. If the degrowth continues, or if the company continues to lose market share compared to its peers, then you should exit. And if you're looking at fresh entry in such a company, there are two approaches to it. The first thing, you stay on the sidelines, wait for the improvement to reflect in the numbers a bit, wait for some early signs of growth, and then accumulate in the staggered manner. The second approach would be just take a small tracking position and keep building that position as you see improvement in the results of the company. So these could be some strategies which you can adopt for companies like this. So that's about Birlasoft. I tried to bring down all the important points in this crisp video. If you like it, hit the like button, subscribe to the channel. If you want me to make videos on your favorite companies, do mention the names in the comment section. Even this was picked up from the last video's comments. Do join our Telegram channel by clicking the link in the description button. Thank you for watching and have a wonderful day.